So moving on to the next section, we're going to discuss financial planning, and we're going to go over pro forma statements and how certain items on the statements relate to one another. So to start this section off, let's pretend that we have a company and these are its most recent financial statements. So this is its income statement, so sales minus costs gives us the net income, and then its balance sheet. So on the left side we have the assets, and then on the right side we have the debt and equity, and both sides balance. Also, let's say for the next year, sales are projected to grow at 20%, and all the items on financial statements, so both the income statement and the balance sheet, are proportional to sales. And with that information, we can create some pro forma income statements and balance sheets. Pro forma just means a forecasted financial statement. So let's start off with the income statement. What's it going to look like? Well, if sales grow at 20%, then we know that the sales next year are projected to be $1,200, because if you take $1,000 and multiply it by 1.2, meaning it grows by 20%, you would get this figure here, 1,200. And since we're also told that all the items on financial statements are proportional to sales, we can figure out the cost as well, because the costs grow at 20%. So 600 times 1.2 gives us 720, and then subtracting those, we get a new net income projected for next year of $480. And then same thing with the pro forma balance sheet. All of the items on both financial statements are proportional to sales, so all the items on the balance sheet are also going to grow by 20%. So taking all these figures, multiplying by 1.2, we get this new balance sheet here. So the assets are $960, the debt is $480, the equity is $480, and both sides balance. Now in previous videos, I've mentioned that the change in equity is usually due to retained earnings that come from net income, or it's the issuance of new common stock, so more money that we get from the shareholders. Well, for this video and for this whole section actually, I want you to assume that any change in equity is always coming from retained earnings, that we're never going to be issuing new common stock. And if we run into any examples where we are issuing new common stock, I will let you know that. But until then, just assume any change in equity is always coming from retained earnings. And if that's the case, then we know that the equity section on the balance sheet at the beginning of the period, plus any retained earnings that happen throughout the period, gives us our equity section at the end of the period on the balance sheet. So ending equity equals beginning equity plus retained earnings. And we also know that the retained earnings is equal to the net income minus the dividends, because this net income, a portion of it gets paid out as dividends, the other portion gets retained. So we have a new equation here. Ending equity is equal to the beginning equity plus the net income minus the dividends. And you may want to write this equation down. You're going to be using it a lot in this section. And now let's go back to our financial statements, and let's assume that the company doesn't pay any dividends at the moment. Now notice how these financial statements, they're not reconciling, because notice how at the beginning of the projected year, the equity of the company is $400. Then throughout the year, they're going to make net income of $480. None of it's being paid out as dividends, so all of it is being retained. So technically, shouldn't our new equity section be 400 plus that 480? Shouldn't it be 880? Why is it only $480? What's going on there? And the answer is that we don't have enough information about what the company is doing. We need to make some assumptions, or we need to introduce a new variable that we weren't given in the information for these financial statements to reconcile. And in other words, we're looking for a plug variable, a variable that we're going to plug in, or a new piece of information that we're going to give in this scenario for all of this to make sense. And we have a couple of options for the plug variable. In this scenario, probably the most obvious one is that the company probably paid some kind of dividend, because the equity section from 400 to 480, it only went up by $80 while we made net income of $480. So a portion of that net income must have been paid out as a dividend. And in fact, we can actually figure out what that actual dividend amount is from this equation here. So plugging all of this information into the equation, we have our ending equity of $480 equals our beginning equity of $400 plus our net income of $480 minus x, which is what we're solving for, the dividends. And then solving for x, rearranging this equation, we would get an amount of $400. And that $400 represents our plug variable of dividends, meaning that if we take that plug variable and add it to the information that we were given in this scenario, now the financial statements will reconcile because we're adding that information, that $400 dividend, we're plugging it into the scenario, and now everything makes sense. Now this example was fairly simple in terms of knowing or it being obvious that the plug variable is going to be dividends, but in reality there's going to be a lot of different options. The biggest assumption that we made in this question is that all the items on all the financial statements are proportional to sales. However, in future examples that's not always going to happen. So for example, let's say in this scenario that everything grew proportional to sales except for debt. What if the debt stayed at 400? What would happen then? What if the equity stays at 400 as well? What happens then? What do we do to reconcile the financial statements? So those are the types of problems we're going to be dealing with in future videos. However, before moving on to that, I would make sure that you are fully comfortable understanding what we went over in this video. Yo, what's up guys? Thanks for checking out my channel. Hopefully you got some value from the video you just watched. If you did get some value, big favor to ask you, please like this video and subscribe to the channel. Any questions, any recommendations on things you'd like to see, please leave it in the comments section. Also check out the description box below for links to material and content related to the video you just watched. Peace out.